Start with our special guest for the next hour or so, Eugene Munster of Piper Jaffray. Gene is a Bloomberg best tech analyst who has also been recognized for his stock-picking prowess by Institutional Investor, Forbes, and the Wall Street Journal. So, Gene, in your opinion, did yesterday's hearings do anything to lower the temperature of the scrutiny on Apple and Google?
No, it's actually just heating up. And the reality is that this is really a witch hunt that's going on against these two companies. The data that they collect isn't being used adversely in terms of any privacy issues, but I think we're still very early in this. I think this is going to be an issue for the next decade.
So have we entered an era where the single biggest competitive threat to Apple, Google, maybe even Facebook and a bunch of other companies aren't each other, but the government? And I'm not just talking about the U.S. government. It could be the EU, and in some cases it could be the Chinese government.
Well, there's definitely a lot of competition between the two, but if you look back at Microsoft, their huge run really started to come to an end when the EU stepped in and started to regulate them more heavily. And so this definitely has an impact. And how it's not about the $500 million. Google's going to do close to $30 billion in revenue. And so what it's more about is them changing their business practices that don't allow them to monetize their products as much. That's the big long-term issue for Google and Apple.
You called it a witch hunt. Why does it seem, and if in fact you're right, if they're going after, vapors, why is it that we hear quotes like this from Jessica Rich? She's the deputy director of the FTC's Consumer Protection Bureau. She said, quote, "The rapid growth of mobile products and services creates many opportunities for consumers, but also raises serious privacy concerns." We had the commissioner of the FTC in here not long ago. He seems like a very reasonable guy. In your opinion, are there not serious privacy concerns, or is the scrutiny warranted?
I don't think the scrutiny is warranted. And I think the reason is this, is that these mobile devices, or whether you're doing searches, it's not associated with your name, your address. It's just a simple IP address. And so what they're doing is they're using this data to optimize the products more for you. If they were connecting your name to this device, that would be a privacy problem, in my opinion. But in this case, they're not making that connection. I guess it's up to the goodwill of Google and Apple not to make that final connection.
So let's bring it home to the issue that concerns you most and ultimately concerns your clients, the investment community. How do investors price in the regulatory risk that clearly comes from being dominant in industries that matter so much to the modern economy?
I think what investors do is look at which companies are going to have just this repetitive regulatory risk. And I think Google's in a greater position to do that, just because if you look at their share, it's so great. It's about 65% of the global search market is Google. In Apple's case, they still have really surprisingly small share, 18% in the phone market, 5% in the PC market. And so I think the way investors think about this is they really are more concerned about the companies with the greatest share. In this case, it's Google.
Is it at all possible, Gene, to ballpark a percentage that you could say is the regulatory overhang on either of these stocks now, or as these hearings and inquisitions build up in the future?
Yeah, what you could do is use Microsoft as an example. And essentially, when the EU hearings started to heat up several years ago, the stock essentially started to do nothing. And I think that there is this continual belief that it was going to get more difficult for Microsoft to really expand their dominance. And so if you're going to ask to put a percentage on it, I think it limits the upside. What could that be? It could be 10, 15% to the stock over years.
Do you think as a result, Microsoft has had to do things differently. Might Google or Apple or others have to change their business model? Might Google, for example, have to stop giving away Android for free, because clearly the whole point is to capture this mobile advertising market? Is that a potential remedy that maybe, say, regulators might pursue, or the company might be forced into of its own accord?
Yes, they could be things like that, having to charge for products that they give away free. It also could be things that actually could be more damaging to Google or Apple. It would be the ability not to capture and to save this data. And so it's things like that basically this data is critical. If you look at the core of what Google has, it's data. And so their ability to use that data, if that gets impacted, that's the real problem for Google.
Can Microsoft succeed where others have failed, right? And essentially using this phone video calling service to make money, because it's not evident.
It's going to be tough. I mean, it's a feature, essentially. Video conferencing, Microsoft has a lot of that technology. They don't have the big user base that Skype has. So from one side, I applaud Microsoft for actually doing something to grow their business, because they really haven't over the last decade really taken some big bets. On the other side, this really is a feature, and they need to integrate it, and there's a lot of steps. And so this is obviously a shot at Apple's FaceTime product, which is picking up a lot of success. And so they got a lot of work to do ahead of them. Microsoft does.
Gene, Microsoft has struggled, as we all know by now, to get the significant share, let's say, of the smartphone business from an operating system standpoint. The deal with Nokia may get it a little bit further. Does buying Skype automatically make Microsoft a much stronger competitor on that front to Android and Apple's iOS?
Well, if you look at the percent, I think the answer is simply no, is that if you look at the percentage of people with iPhones that actually use FaceTime, it's sub 10%. So the reality is over time that's going to grow. But as far as a killer
not a game
feature,
changer right now.
It's not a game changer feature that the hardware people have really been demanding. So this is a need to have. It's a feature it's neat. It's a need to have, but it's not a game changer.
So we know, obviously, eBay has a history with Skype. You know eBay just as well as any other company. Does Microsoft and Skype have more in common, as Steve Ballmer alluded to, than eBay and Skype?
It definitely does. I mean, when eBay originally did the Skype deal, we all were kind of scratching our heads, and they had an explanation to allow sellers and buyers to communicate, but the reality is it just wasn't a good fit. It makes more sense with Microsoft than eBay, but that's not saying much.
Because, I mean, they purchased it was $3.1 billion, right? And then they had to take a $1.4 billion charge. I mean, that was awful.
It was awful, but at the end of the day is that eBay did pretty well on this, and at the end of the day, they got close to $2.5 billion out of this, and so I think they were still a large shareholder of Skype.
And Skype is a much more mature and much more widely accepted business now than it was way back then.
Definitely.
What does $8.5 billion for Skype say about Gmail and chat and FaceTime? Can you put a valuation in a sum of the parts on those businesses to Google and Apple now?
You can. I mean, if you look at just the number of Gmail users versus Skype, it's about 4 times as many, so you can kind of imply a greater valuation of that. The reality is that Google's never going to spin out something like Google Chat would be the comparable product. And so, yeah, you can put some parameters around that. It's still a relatively small part of the valuation of Google.
Does it make those stocks, in your opinion, more valuable than you thought they were before?
I think what it does signal is a sign that big companies are willing to make bets on mid-sized and smaller internet plays. And I think this could issue a new era in terms of M&A activity. And we've seen this in the past a decade ago.
Well, so if the moment you mention M&A, we have to follow up with the obvious question. Who's a target?
Well, if you look at the most obviously exciting businesses, there are businesses like Groupon, which obviously Google tried to buy. Living Social would be another example. LinkedIn. These are really the kind of the gold standards. There's other companies across the world in search that are going to be more attractive as well.
Do you think it is weird at all that Google and Facebook were not serious bidders at all to Skype, that Microsoft pretty much had an open plan?
Well, in their case, they have a comparable product, so it was. I was not surprised to see that. But at the end of the day, is that I think that Microsoft did pay a lot, and they've got a lot of work to do.
Let's go to this Google conversation, because Deirdre was just talking about the driverless car, and it raises a question we have asked so many times about Google. Is this company really in the business of making money, or is this company really in the business of pet projects like a driverless car? How much money could a driverless car possibly make for Google?
The only way it can make money is getting us to talk about it like we are today, and this is basically marketing. Remember a few years ago, Google had a promotion, send a man to the moon, and so, I mean, they're very clever at things like this. Obviously, this is, as you said, it's not a money maker. It's about, they say 15% of the employees' time is dedicated to these pet projects.
Now,
I was just going to say, is that going to change, though? I mean, we know that Larry Page has wanted to streamline, has wanted to encourage engineers to approach him directly. We know he's even sitting in front of a couch in his office. He kind of wants to open things up. Does that mean we're going to see more pet projects, which sometimes aggravates investors, or are we going to see less? I don't want to say more serious things, but that's essentially what I mean.
I think you're going to see more, and I mean, they're really adding to the number of people. They had one of the most aggressive hiring quarters in 2 years during the March quarter, and so I think Larry, what he's done, I mean, he's only really been there for a few weeks now, but really what the hammer he's put down is in the hiring and paying people more. More people mean more innovation. They've got some big events going on here with Android, with on the mobile, with YouTube that they can continue to invest in as well.
A few months ago, Gene, you put the Google situation into perspective perfectly. You described Google versus Facebook as Microsoft years ago versus Google, and Microsoft is still struggling to compete with Google. So do you sense, in the short time that Larry Page has been back in the CEO seat, that there's an awareness of this, that the company is actually moving faster and is going to be a more credible and effective competitor against some of these emerging threats?
Well, they're definitely putting effort. They're definitely putting dollars behind it. Their margin has been negatively impacted that, so they're spending a lot more money. So yes, we do sense that. In terms of Facebook in particular, it's going to be impossible for Google to reinvent the social graph. They're not going to do that. They're going to have to come up with products that piggyback on what they do well, and social products around search, which they're already doing.
You mentioned some of the areas they can expand in. If you were giving them, I know this is not your role, but specific advice, where do you think they should expand to grow their growth?
It really is Android. I mean, if you look at the, and obviously they have a product in there too, but just really building out the monetization of Android. Right now there's about 300 million smartphones that are computers in your pocket. There's about 1.3 billion total phones. The smartphones are growing at 80%. So that's a huge change, a huge shift in consumer behavior. And the interaction, the engagement that people have with their mobile phones is significantly higher than the PC. And so that's the big opportunity for them, is find ways to truly monetize Android, which they haven't done yet.
Gene, how tolerant are investors going to be of this higher spending? Margins, quarter in, quarter out, are such a key focal point when it comes to tech companies. If Google has to spend a lot more money for a while longer, the margins are going to remain under pressure. How will investors respond?
Well, they haven't responded well with Google, and I think if they continue to invest at these levels and pressure margins, I think that would be negative. If they keep them where they're at, that's probably a net neutral. I think one of the things that always surprises me is you look at Amazon, they go and lower their estimates by 50% and the stock goes up. Google does something not as dramatic and investors just don't buy it. And I think there's just a fundamental belief that search is not an exciting growth story where e-commerce is.
Well, Gene, I want to ask you another question, though, not about Apple. We might get back to Apple in a moment, but about Amazon. This came up just a little while ago when we were talking about whether or not Google's growth prospects are better than Amazon's growth prospects and how investors see Amazon as a growth stock. How is it that Amazon, a company with this 3% net margin, is a $92 billion stock?
The reason is that it's an open-ended opportunity, a really open-ended growth opportunity. If you look at the percentage of things that are bought online in the U.S., excluding gas and food, it's about 6%. In Western Europe, it's about 4%. In Latin America, 2%. And in China, about 1%. And I think that's the big difference. If you look at Google, the ability to grow users is starting to slow. Or if you look at Amazon, they're still, it could be 15, 20% of what we buy in the next decades online. That's the opportunity.
I see. So it doesn't really matter that Target, for example, has better bottom line margins than Amazon. Amazon has this effectively unlimited scale opportunity that a bricks and mortar business just can't possibly hope to match.
Exactly. They're just getting more and more product, and more people are going online to buy stuff at Amazon.
Gene, let's take a step back for a moment and talk about trends. What have some of the dominant trends been in tech the past couple of years? Location, it's a big deal right now. Mobile advertising, a couple of big acquisitions by Apple and Google on that front. Security is becoming a big deal. What trends are you betting will dominate tech investment and innovation over the next several years, the ones that we're going to start hearing about?
Well, I think the next couple years, it's mobile. I think we talk about the mobile devices, the tablets, the iPad. That's going to be a lot of investing in the next couple years. But beyond that, 2-3 years down the road, it's the television. It's really going to be totally redefined. There's about 200 million televisions sold worldwide a year. Next year, just over half of them are going to be internet enabled. But the ability to tie that TV into your other devices, I think, is going to be just a game changer for consumers. I think there's also areas in mobile payments, the ability to use your phone as your wallet is essentially going to be an opportunity. And lastly, and this is the wild card one, sounds crazy, but 3D printing. Instead of going to Dwayne Reed to buy a toothbrush, you print it out. You want a small toy, you print it. That's going to be coming. I've
just started to read about it. It's fascinating and immensely complex, almost beyond sort of describing it the way that you did. You really can't go into any detail about it. Let's go back to trends and the company's best position to exploit them. The television, for example. Is Apple going to come out with its own TV?
It's inevitable, and we think it's in the end of 2012. And the reality is that they have a huge opportunity there. Last week, we believe they just hired one of the visionaries from THX, and they're a big sound company. And why would Apple hire a visionary from THX the only reason is for the home entertainment side and really to do audio right. So I think Apple's in a great position. That market is relatively small compared to the other markets that they're in. But as far as some innovation in the story over the next several years, we still believe that that's coming. So they're in a good position.
And then how about some of those other trends? Clearly, whether it be Apple, Google, maybe even Facebook, well positioned to capitalize on mobile. But as you think about the 2 and 3 and 4 and 5 years out, which companies do you think are best positioned to tap into those new technologies as opposed to being the late adopters?
Well, I think you're going to see actually some of the companies that historically haven't been involved in mobile payments, for example, companies like MasterCard, American Express, Visa, really beef up their offerings in that space. PayPal, obviously, from eBay is going to be a player in there as well. And so I think on that front, I think in terms of Google and the monetization of mobile through Android, more location-based services, Groupon's come out with this just fascinating new app where it basically says, I'm hungry or I'm bored, and you tap on it and it'll allow you to get a deal immediately based on where you're at. So those are some of the companies, Groupon and some of those other ones that are going to benefit from this.
Let's talk for a second about valuations. The RenRen IPO of last week, going public at what, 72 times sales. What does that say to you about the future of tech investing and the opportunities or disappointments that are in store for people?
Well, it obviously is reminiscent of a decade ago when there was this bubble, some of these valuations. Their valuation is supported by the $75 billion valuation of Facebook and the reality that Facebook isn't available currently in China. So I think that that's a little bit of an anomaly. But I think one thing, just a broader picture, is you have seen some very hot valuations in China more recently, and they have come down actually in the last week.
You made a very good point about Facebook and the $75 billion valuation. It's on a private stock market. You are a public stock analyst. For the most part, you have to keep an eye on private companies. How much of an issue is it, the opportunity that these tech companies now have to grow and flourish as private companies? They don't have to tap into public capital anymore, necessarily. What's it going to mean for the investing public?
Well, the investing public needs to keep an eye on these private companies. I mean, Facebook is as much of an impact on the market as Yahoo and Google and Apple, and the reality is it used to be the private companies, you didn't worry about them, you focused on the public ones. So I think from that perspective. And second is that they can invest more because they're not tied to quarterly results, and so they tend to have more innovation as well. So I think the reality is you got to track them. I think what Facebook is doing, they're doing some really innovative things on credits and really changing payment side, which people don't think about Facebook in that context now, but in the future I think they will.